LIBOR is going away. With the announcement by the Financial Conduct Authority head, Andrew Bailey, in 2017, that banks would no longer be required to submit transaction data that supported the calculation of LIBOR, market participants were notified that they would have to find another solution for a floating rate for valuation of their investments and other cash products. I'm Jamie Cain, and I'm here with Lizet Steele, and we're with Eversheds Sutherland in their Washington office. And we're here to talk to you about the current status of LIBOR and transition events.
Since the announcement by Andrew Bailey of the FCA in the UK, other regulators have followed up and have mandated either transition plans or risk disclosures with respect to market participants that are affected by the LIBOR transition. The most recent announcement publication was by the New York State Department of Financial Services, which requires that by February 7th, regulated institutions submit plans to transition from LIBOR to an alternative reference rate to the department. In addition to the New York State Department of Financial Services, the SEC has also published guidance with respect to the transition away from LIBOR. They did so in the middle of last year with respect to risk disclosures and other disclosures in public filings. And after the guidance, we saw an increase in the risk disclosures with respect to the LIBOR transition in quarterly filings. Late last year, they also published a public statement with respect to audit committees and how they should be aware of any LIBOR transition plans. This was the first time the SEC mentioned having a LIBOR transition plan in place. There are other regulators that have also either published or required market participants to act with respect to the cessation. The Federal Housing and Financing Agency probably has issued the most comprehensive request to the Federal Home Loan Bank, which is prohibited from acquiring certain LIBOR-related products on certain dates going forward. The UK Financial Conduct Authority has issued Dear CEO letters to certain regulated entities in Europe, and with respect to those letters, they required those entities to submit LIBOR transition plans in December of 2019 to the FCA. Other regulators, including bank regulators and FINRA, have mentioned the LIBOR transition to be part of their examination process going forward.
Regulators have reason to be concerned about the transition and how it may impact financial markets generally and financial institutions individually. There are many things plans that regulated institutions are putting in place, as well as non-regulated institutions that use LIBOR in their business, both in their loans that they may have or in their investments or other products that refer to LIBOR. Mm-hmm. There's a potential for contract default or frustration if adequate fallbacks are not in place. There's continued effectiveness of hedges to the extent that whatever solutions are developed don't match up. What is the market going to be using, and whether or not there's going to be adequate liquidity? There's a debate about certain issues in terms of whether or not, for example, there is a forward-looking term rate that could be used rather than using a rate that has been determined and then looked at in arrears. This could have capital impacts, could have accounting and tax impacts, and there are going to be issues under securities, commodities, banking, and consumer protection laws that will need to be addressed. Certainly there will be disputes. The time for action is now. While certain of these issues have not yet been fully resolved, it is clear that regulators are taking the view that processes must be in place, and that in addition to scoping out whether or not you have LIBOR exposure, solutions to the potential that LIBOR is going to go away, which is no longer uncertain, and methods for implementing those solutions have to be taken. Thank you for joining us. For more information on asset management regulation in 2020, the LIBOR transition, and other bottom line videos, please visit us at eversheds-sutherland.com.